Yet another week, yet another most anticipated earnings. This week we're hitting you with a solid August 31st, 2020. We're ready for this, right? Start of the month, September, coming up on Tuesday. We're kind of simmering down a little bit, obviously. We're getting towards the end of this lovely earnings season, which, by the way, has been lovely, and exactly that. I can't wait for next earnings season, no doubt, obviously, but there'll be some companies to report on, no doubt. But we're gonna hit you with this week and get into some of these key ones. Monday before open, we have Catalent, Regis Corporation, not owned by the Regis Philbin, believe it or not. And then we have I-Mab Biopharma. Nothing that excites me out of that. But I will say after close Monday, we have an exciting one. Zoom, obviously, stock up incredibly massively this year. It's an earnings you have to look at because the numbers are somewhat incredible, right? EPS estimate expected 45 cents this quarter, which I need to mention that last year alone they only put up 35 cents. So that would be a massive number if they were able to hit that. I do think they'll be obviously over the 35-cent mark. I can't give you whether it's going to be a hit or a miss on an EPS standpoint, but I expect good numbers. My focus mainly is on revenue. And they're expected to post a $500 million quarter. $500 million, which represents around a 200% increase year over year. For the full year, they're expected to grow 191%, so nearly triple over the previous year. And I think this is certainly something very feasible. And expected to simmer down next year. But I think this quarter should be a $500 million quarter, no doubt. I think it should be something actually even higher than that. There's so many really headwinds right now for them that are pushing them forward. So I think there's a lot of good stuff to talk about with this company. Obviously, as you mentioned, not only working from home, Zoom becoming a just standardized meeting place for all business. Zoom has been standardized now. It's the go-to. School also has a big part in that. School is massive on that, and just in general, video chat with those people you don't necessarily get the chance to see. Those in hospital, those in nursing homes, people you don't get to see nowadays necessarily. Where Zoom gives you that opportunity. So very interested in these earnings, no doubt. Monday we have ScanSource as well, and Montrose. Nothing super exciting. Tuesday before open, Wanda Sports. I don't know who Wanda is. I've met a girl named Wanda. I've met a woman named Wanda, and I don't think she owns this one, so I don't know who owns this. And then you have obviously Build-A-Bear. I would expect pretty horrific earnings from them. I mean, that's my opinion on the matter. I could be wrong in that aspect, but I don't know if these are facilities that weren't open a majority of this quarter. So I don't think online was able to really, rocket them forward. I don't think it was able to. And normally this Q2 is a weak quarter for them anyways. Q4 is their big quarter. So I just don't expect much out of this company. Tuesday after close, At Home has been absolutely blasting forward since their lows under $1 this March. They've been blasting forward back into the teens. So it's a key earnings to watch just because of the repercussions it may have on the stock. Stock's up big time since March. So H&R Block will see a benefit, obviously, because of the delayed tax deadline this month or this year in July as opposed to last year. They wouldn't have had any of that impact in this quarter. So you should see better numbers just because of that. More people pushing off to the last minute to file taxes, as people do. That's just what they love doing. Shoe Carnival, Caleres, Avid Bioservices, and Jamf or JamF. I don't know, but not too familiar with the company. Wednesday before open, I just want to show this one because the fact that I don't necessarily enjoy showing a garbage fire. If I did, I would show pictures, obviously, of rioters burning down garbage cans. They light dumpsters on fire and start throwing into places. I don't know why they do it, but it's what people do. But here's an actual garbage fire as well. Macy's expected negative $1.77 in EPS. Disgusting. For the full year, expected negative $4.37 versus $2.91 positive the year prior. For the full year, expected to decline 30% in terms of revenue. Only supposed to do $3.47 billion this quarter versus $5.5 last year. Now that is a true garbage fire. They are expected to grow next year though. Now is that feasible? I don't know, but the numbers just keep dwindling on this company. And the stock keeps dwindling as well, which makes plenty of sense because these numbers are ugly. GSX, Tekuru Inc., Vera Bradley, Guess, Giant FinTech, and Brown Foreman. Obviously, it looks like a legal firm. What can I say? Potentially insurance. You never know. After close one, obviously interesting company, it being CrowdStrike, no doubt. We love looking at a CrowdStrike. Expected negative 1 cent in EPS. So if they could post a profitable quarter, it would be big for this stock. Negative 18 cents a year prior. They are expected negative for the full year though. Sales growth though is what we're talking about. We're talking about revenue of this company. Expected an 81% sales growth. 188 million expected. I do think I could see a beat on this aspect, but it's going to be a tough number to beat. But I do think they pull it out, and I don't think it's going to be a beat by a massive number, maybe less than 10 million. But I do think you'll see a beat and probably a little bit closer to 90% sales growth. I could be wrong in that aspect, but I just got a feeling from looking at other companies' earnings of similar strife. Then we have Cloudera, Zuora, MongoDB, Sportsman's Warehouse, which don't know necessarily what to expect from them, but we have PagerDuty, Five Below, which is really just the fancy man's dollar store. Okay, so we're interested obviously because dollar stores perform pretty well if you look at last week's earnings. Five Below probably does a good thing as well. They've been expanding store count for sure, so I'd like to see what they do. eGain, SIAC, and Smartsheet. Before open Thursday, I did have one more share, obviously, in Campbell's. Not necessarily a reason why. I just think the expectations are a little bit low for this company. Expected EPS of 60 cents versus 50 cents. Not really what I wanted to talk about. More of the revenue estimate of $2.04 billion. I do think they'll beat that. Only expected to grow less than 1%. I think they'll grow closer to 3 to 5%. This, frankly, is their hoarding quarter. This is the stock up quarter for them. So I think the demand is going to be pretty good this quarter for them. Expected still to decline this year by 5%. So nothing super exciting. Again, this is a super boring stock. Campbell's is it's as boring gets, And then we have a Momo. Michaels. People are doing a lot of projects. I think Michaels actually seeks to benefit because people are doing a lot of just random artistic projects, and Michaels the beneficiary of that. Sienna, Duluth Trading. I see their commercials for their undies all the time. I'm very curious if their undies are that soft, because trust me, I've got a lot that needs softness. Get it? Signet, Toro, Designer Brands, baby. Donaldson and Genesco. After close, we have a solid DocuSign. Probably a more normal service now that you see, maybe physical signatures. They provide a little bit more germs. DocuSign may be taking over a little bit of that business. What can I say? There's a chance. Broadcom is a good company. Smith & Wesson. People are purchasing firearms for sure quite a bit. Get your Smith & Wesson. Yext. Sounds like a term used by kids nowadays. We got Yeet. We got Yext. We got Yurt. We got it all. Domo. Medallia, the Cooper Companies, Tilly's, Oxford, and Quanex. So there are some good earnings this week, I can't deny, but we are simmering down, no doubt. I still hope you enjoyed this and you have a great day, and I hope your earnings season has been quite nice like mine.